So this is the crap I'm talking about. The housing market just hit a level not seen since 2007. Financial string of soaring home prices, up 32.6% over the past 2 years, was lessened to a degree by historically low mortgage rates during the pandemic. Even as prices soared, many buyers' monthly payments remain reasonable. Those days are behind us. Now that rates have returned to pre-pandemic levels, new home buyers are starting to feel the full weight of record prices. Well, that may be true, but it's a half-truth. That is very much a slant, and it's the dadgum internet. It's the media trying to keep you down, trying to keep their thumb on you. If their thumb is like this and it's on you, then you're dumb and you don't think for yourself. You just read this article about Black Knight. You ever heard of Black Knight? Me either. Back in December, the average 30-year fixed-rate mortgage sat at 3.11%. A borrower who took out a $500,000 mortgage at that 3.11% rate would have seen a monthly principal and interest payment of $2,137. Now that the average rate is up 4.72%, a new loan at that size would equal $2,599 monthly payment, again, principal and interest. Over the course of 30 years, that's an additional $166,106. Now that's math. You can't really argue with math, but the tone that it's written in is just complete garbage. This swift jump in mortgage, this is where the media starts to think for you instead of you just being an intelligent person. Like, remember when the news just gave us the facts and we could make up our own minds what the facts meant or do more research or not? Well, that's gone, and now it's, here's some numbers, and now let me tell you how to feel about this. This swift jump in mortgage rates puts home buyers in the worst position since 2007. At least that's according to one metric produced by Black Knight, a mortgage technology and data provider. Listen, are you going to buy a house or are you going to be a little wimp? If you are swayed by an article on the internet that's linked to Fortune, well, you shouldn't buy a house. You should just rent forever. Like, if you think about it, what's the alternative? You gotta live somewhere, so you can live with your mama in the basement or in the guest room, I guess. You can rent or you can buy. You can freeload or you can pay, and inside of pay, you either rent or you own. Like, those are your options. Now, you may not like your options, and that is okay. You are well within your right as an American, or wherever you're watching this from, to That's what's so great about a free-thinking society is if you don't like your options and they all suck, you are well within your right to just be upset. Now, what do you do? Because Black Knight says you're in a worse position possible, I guess, well, let's just go over your options. Option 1, dig a hole in the ground and stick your head in it. And whatever dirt or loose pediments are around you that you can just kind of bring in to maybe protect your neck, but just bury your head and, I don't know, wait for Jesus. That's an option. Or you can look at the alternatives. Okay, well, if I'm going to rent a home, what would that cost me? Based on my budget, what can I rent? And you probably have a pretty good barometer right now what you can afford monthly for housing. Or you can take the same monthly housing amount and you can put that towards a home that you own. Who gives a shit if rates are double? Who cares? If they're triple, who cares? $2,000 a month is $2,000 a month, right? If you can afford $2,000 a month for rent, would you rather rent for $2,000 a month or buy for $2,000 a month? Well, if I rent for $2,000 a month in my area, I might get a nicer place. Well, there you go. Go rent. If that's how you make your decision is because it's a nicer place, well, you probably should rent. But 5 years from now, when you rewatch this, and you could have owned, but you chose not to because you wanted something nicer, I will not feel sorry for you because you've missed out on all this appreciation. So, do you want to build wealth through real estate, or do you want to be right? Do you want cash in the bank, or do you want to beat your chest and stand on the hill and say, I told you, idiots, it's better to rent than buy? Look, if you want to rent, go rent. I don't care. If you want to buy, go buy. I don't care. But to read an article like this and just assume that at current mortgage rate levels, the typical American household would have to spend 29% of their monthly income if they were to make a mortgage payment on the average priced U.S. home. Well, are you buying an average priced U.S. home? Or are you buying a home in your area? Whether it's the average or not, who cares? Who cares? It's your local area. If you live in Dallas and you work in Dallas, who cares what the average home price is nationwide? Like, it's such propaganda. Hopefully you see that. I'm sorry. I'm excited. That's according to data provided by Black Knight of Fortune. Black Knight's mortgage payment to income ratio, which averaged 19.9% during the 2010s decade, hasn't topped 29% since. Most people, they're not even reading anymore. All they hear is, oh my gosh, it's a terrible time to buy. We shouldn't buy. Ah! And you know what that's usually followed by? I wish we would have bought 2 years ago. If I had only bought that Yahoo stock in 1998, when do people stop saying, I wish I would have bought, and just buy, whether it's a good time to buy or a bad time? Just buy, just get your flag in the ground and own something. You gotta pay to live somewhere, unless you're in mama's basement. And if you're living in mama's basement and she's not charging you, shame on you. Borrowers are getting squeezed by soaring mortgage rates. While affordability, or better put, lack of affordability, levels are beginning to show glimpses of the mid-2000s housing market, it doesn't mean we should pencil in a 2008 housing crash. During the last housing boom, home builders were churning out homes at an unsustainable level. Opinion. Once the housing market began to slow down around 2006, the market quickly became oversaturated with supply, something that caused prices to sink further. Well, that's true. This time around, home builders aren't even keeping up with the demand and demographics. Also true. If the home builders can't keep up with the demand and the demographics, then that means prices are increasing. So do home builders just all of a sudden snap their fingers and now that they can keep up with the supply and demographics? If a slump does come, industry insiders tell Fortune, it's unlikely inventory would flip from severely undersupplied into a 2000-like housing glut. The mortgage market is mostly fixed rate, so rising rates won't raise the monthly payment on current homeowners, but instead will disproportionately impact first-time home buyers. Robust mortgage underwriting should keep foreclosures limited, preventing the forced sale that would weigh on home prices, while Morgan Stanley research in a report published last week. Look, U.S. home price growth. If you look at where it was in 2001 and where it is in 2021, it's way up. It did this. Now it bounced around, but again, these are national average. Year-over-year change in the S&P CoreLogic Case-Shiller Home Price Index. What index does that cover? What geographical range? Is that the entire country? Is that putting Detroit and San Francisco in the same price index? Like, just please use your brain. Don't look at this and let an article tell you it's a good time to buy or it's a bad time to buy. Just think. There's a growing chorus of housing economists rooting for soaring mortgage rates to pull some steam out of the housing market. In their eyes, the rate of home appreciation is simply unsustainable. It's simply unsustainable. Like, what does that even mean? If it continues beyond 2022, it risks the housing market getting overheated. What does that mean? If you touch it, it'll burn you. It's overheated. They'd rather we slow to a sustainable level. The word sustainable is just so funny to me. Sustainable level of growth rather than risk a bursting bubble. Okay, let's say there is a bubble and it's gonna burst. What does that mean? You buy a house in Plano, Texas for $500,000 today and the bubble bursts tomorrow. Now what? What does that mean? What are the implications for you in your world? The housing market has just gone to What does that mean? It probably doesn't mean anything, unless if you're a real estate agent or a mortgage broker, that might affect your income. But in terms of your house, it doesn't mean anything. In fact, if values plummet to an unsustainable level, your tax basis drops. You pay less for the house than you would have otherwise. Well, that would be a terrible thing. Well, dadgummit. Which way do you want it? Do you want the price of your home to continue to rise? Or do you want it to drop? Or do you want it to stay flat? The idea that soaring mortgage rates would pull some steam out of the market makes sense. No, it doesn't. It doesn't make any sense. After all, it's an economic shock to the demand side of the market. Irrespective of what interest rates do, there is a massive housing shortage. There are plenty of people out there that can buy, that are going to buy a house irrespective of what interest rates do. It's not gonna even make a dent if the soaring rates don't pull some steam out of the market. It will affect it a little bit, but there's such a shortage for homes. People are gonna find the money somewhere. They're gonna borrow it, they're gonna steal it, they're gonna side hustle it. They're gonna find that people have this uncanny way of just figuring it out, irrespective of what Black Knight said. Black Knight. While home price appreciation should decelerate, we believe it will remain supported by tight supply. In fact, rising rates themselves will continue to keep supply subdued, as homeowners will be locked in and less likely to sell at their current lower rates, writes Morgan Stanley researchers. Which researcher? Which Morgan Stanley researcher said this? Was it, and where did he say it? Was it at the bar during happy hour? Listen, you're gonna be fine. Take your vitamins, buy a house, make your mortgage payment, make money, spend less than you make, and you're gonna be fine. Whether the home prices, the appreciation decelerates or not, if you're driving 100 miles an hour down the tollway and you decelerate to 99, you're still going pretty fast. Fast enough to go, well, not go to jail, but get a ticket. What does decelerate mean? Well, decelerate, if you're going 100 and you slow to 90, you're still going 90 miles an hour. But it's just funny how these articles are written to scare people into doing nothing or just spewing negativity. So emotionally, be cool, honey bunny. Be cool, honey bunny.
Let go of it! Tell that to be cool. I'm gonna kill you. Say be cool. Be cool, honey. Say be cool.
You're gonna be fine. Take your vitamins, take a nap, rest. If you see an article from Black Knight, read it. But if you get all spin up and say, aha, I knew it. It was a bad time to sell my Beanie Babies. Come on, man. Relax. You're gonna do great.